Pemodelan Nasional is among a group of shareholders which is believed to have also included the Employees Provident Fund that have voted against Axiata Group's proposed 8.72 trillion Indonesian rupiah acquisition of a 66.03% stake in Indonesia's PT LinkNet. Nevertheless, the resolution was passed as the telco managed to garner 57.83% of the votes of those present and voting at the extraordinary general meeting held today, while 42.17% had voted against. The approving majority represented 4.837 billion shares, while the dissenting had 3.527 billion shares. Axiata Group Chairman Tan Sri Syahril Ridza Ridwan told reporters after the EGM that the dissenting voters were mostly concerned about the impact on its balance sheet. He said that they do have time to explain to the shareholders that Axiata's balance sheet is manageable. He was, however, tight-lipped about who had voted for or against the resolution, saying that while they do have the total number of votes, he didn't have the exact breakdown. After the EGM, PNB, who is Axiata's third largest shareholder with a 14.67% stake, said it had voted against the deal. On its website, PNB aired its concerns over the proposal having an adverse impact on the financial performance of the company in the immediate term due to the potential increase in debt levels weighing on its cash flow and earnings. This, coupled with the lack of visibility on the impact of geopolitical developments on Axiata's international operations. This confirms a report by The Edge earlier that PNB would be blocking the deal on concerns about its impact on the funding needs and gearing of Axiata, which is also in the midst of merging its mobile units Celcom Axiata and Digi.com. The EPF is Axiata's second largest shareholder with a 16.95% stake, while Khazanah Nasional sits atop the major shareholders list with a 36.74% stake according to Bloomberg data. The deal still requires regulatory approval. To recap, Axiata proposed the LinkNet acquisition in late January with the rationale that it intends to capitalize on the fast-growing fixed broadband market and enterprise market segments in Indonesia. Axiata said that it would also create significant synergies for LinkNet and XL Axiata through sharing of networks and extensive relationships with customers in Indonesia. Maybank saw its first quarter net profit drop by 14.6% year-on-year to 2.04 billion as top line fell and overhead expenses rose. Revenue for the quarter fell to 11.9 billion from 12.2 billion a year earlier. No dividend was declared for the quarter. Maybank, which is the country's largest bank in terms of assets, says it has a cautious outlook owing to geopolitical tensions and market volatility. The group said that while the reopening of regional economies led to a pickup in loans growth and reduced impairment charges, the market weakness mitigated this. New Group President and CEO Datuk Khairul Ramli said in a statement that the positive trends in the group's first quarter financial performance were evident across key markets despite the lingering impact of global factors on the operating environment. He explains that while the outlook for the remaining part of the year remains mixed at this stage, Maybank will focus on tapping into growth opportunities across customer segments in its key markets while maintaining its capital and liquidity strength to facilitate these opportunities. At the same time, Maybank says it will ensure its risk management capabilities remain robust and cost management and productivity efforts continue. Khairul adds that the bank will aim to accelerate solution rollouts on its digital platforms to continue to fulfill its customers' journeys while increasing market penetration regionally. Genting Malaysia saw its net loss for the first quarter narrow to 126.5 million from 483.6 million a year ago as revenue soared almost threefold to 1.72 billion ringgit. According to the boss filing, Genting Malaysia said that its top line was boosted by a significant increase from its leisure and hospitality business in Malaysia compared with a year ago. This was mainly due to higher business volume from the gaming and non-gaming segments as a result of the easing of travel restrictions during the first quarter of FY22. Meanwhile, Genting Malaysia saw revenue from its businesses in the United Kingdom and Egypt improve nearly tenfold, while its businesses in the US and Bahamas also reported a 40% increase in its top line. The group said it is positive on the longer-term outlook of the leisure and hospitality industry as international tourism gradually recovers. In Malaysia, Genting Malaysia says it will continue to focus on ramping up operations at Resorts World Genting and place emphasis on maximising yield contributions by intensifying database analytics and targeted marketing efforts to grow key business segments. In the UK, the sustainability of the group's recovery momentum remains its main priority on the back of lifting of all COVID-19 travel restrictions in the country. In the US, Genting Malaysia says that marketing efforts will be intensified to grow the group's US customer base whilst leveraging on Resorts World New York City's latest improved facilities and Empire's expanded product offerings to drive business volume and overall returns. In the Bahamas, the group will continue executing various cross-marketing initiatives in addition to capitalizing on the various world-class amenities to drive visitation and spend at Resorts World Bimini. Capital A, formerly the AirAsia Group, saw its net losses for the first quarter widen to 903.8 million from 767.4 million, as the current quarter recorded a share of loss of 143.1 million from an associate, following the completion of the restructuring and recapitalization plan of the aforesaid associate. In contrast, revenue spiked by 153% to 811.8 million due to the revival of air travel during the quarter as travel restrictions, including testing, quarantine and entry requirements, were gradually relaxed. However, Capital A said that despite the resumption of operations and the increase in capacity, higher revenue during the quarter was partially offset by higher operation costs on fuel and maintenance. On its prospects, Capital A said that the outlook is currently positive amid high rates of COVID-19 vaccination and booster shots, as well as the reopening of international borders around the world. It adds that the aviation segment continues to optimize its network and fleet strategy, while the group works to enhance its revenue growth through promotions such as the Super Plus Pass that combines flights and food delivery. The group says that all signs are pointing toward the return of regional air travel to a greater degree of normalcy within this year and the recovery of international air traffic rapidly throughout 2022 and the year ahead. For its digital segment, the group said AirAsia Super App is expected to grow noticeably off the back of the continued resurgence of travel demand, alongside expected growth from AirAsia Food, AirAsia Ride and AirAsia Express. Former Sabah Infrastructure Development Minister Datuk Peter Anthony has been found guilty of forging a letter in 2014 from the Office of the University Malaysia Sabah Deputy Vice-Chancellor for a system maintenance contract work. Sessions Court Judge Azura Alwi said that the defence had failed to raise reasonable doubt on the prosecution's case, while the prosecution had proven its case beyond any reasonable doubt. She adds that although there was no direct evidence, there was circumstantial evidence to show that the former VP of Parti Warisan Sabah had indeed forged a said document for his benefit. Furthermore, she says that the defence's case was inconsistent, a bare denial and an afterthought. Judge Azura also sentenced the Malalap State Assembly person to 3 years in jail and a fine of 50,000 ringgit and set bail at 50,000 ringgit. Anthony's counsel, S. Devanandan, asked for a stay of execution of the jail sentence and said that they will appeal against the decision. Arguing for a stay, Devanandan cited the notorious SRC International case, where he said a stay was granted in that case not only in the High Court but also in the Court of Appeal stage. Upon hearing the submissions, Judge Azura granted a stay of execution of the jail sentence but ordered that the fine be paid within the day on Thursday.